You paid more in taxes this year than a man worth $10 billion. Not more in dollars. More as a share of what you actually earned. You don't know that yet. Right now you're just staring at a number at the bottom of a form, wondering if you did something wrong. You didn't. This isn't a story about him. It's a story about you, and about a version of you that could have paid a completely different number, not by earning less, but by earning it differently. Nobody sat you down and explained this. Nobody was supposed to. Maybe that's not an accident. Maybe the tax code was never broken. Maybe it was built exactly the way it works right now, on purpose, for someone who is not you. Say that out loud to a room full of accountants, and watch how fast they change the subject. Let's go back to the beginning. Before the shelters. Before the structuring. Before you understood the difference between money you work for and money that works for you. You're 22. You make $20,000 a year. Warehouse shift, 7 in the morning, concrete floor, a paycheck that already has its taxes taken out before it ever touches your hands. You never see that money. You never get the choice to keep it or move it or delay it. It's gone before you are. Marcus works the same floor. Marcus picks up every overtime shift he can get. He tells you proudly that last month he made almost $900 extra. He does not mention that a third of it disappeared before his check even printed. He thinks he is getting ahead. He is running faster on a treadmill that was never measuring distance. You start noticing something. The harder the money is earned, sweat first, dollars after, the faster it's taken. Nobody explains why. There isn't a person to ask. There's just a number smaller than the one you expected every 2 weeks for years. The first rule of the ladder, the tax code, does not ask how hard you worked. It only asks what box the money arrived in. Something shifts. Not in the work, in the ceiling above it. You're 28 now. $60,000 a year salaried, an office instead of a warehouse. You thought this would feel different. It feels almost the same. You make too much for any assistance and not enough to notice any advantage. Your neighbor, Walt, is retired, used to do payroll for a mid-sized company. One evening on the porch, he asks what you did with last year's refund. You tell him you don't get one. You owe every year a few $100s like clockwork. Walt doesn't laugh at you. He just says quietly that a refund was never a gift and owing was never a punishment. They're both just proof you never had a say in the timing to begin with. Somebody else decided when your money moved. You just found out the balance afterward. That sentence stays with you longer than it should. The middle of the ladder is where the system watches the closest and rewards the least. Something shifts. Not in your paycheck, in what you notice about other people's paychecks. You're 33. $150,000, a promotion, and for the first time, stock options instead of just salary. Nobody in HR explains what happens if you sell them early versus late. You find out by accident, reading something at midnight you should have been told in daylight. Sell too soon, and it's taxed like a paycheck. Wait 1 year, and it's taxed like something else entirely, something gentler, something that assumes you were patient instead of desperate. A guy 2 desks over day trades on his phone during lunch. Every win he tells you about loudly. Every loss he never mentions. He's taxed at the highest rate on every single trade because none of it waits long enough to become anything but ordinary income dressed up as excitement. Time, you realize, is the first tax shelter. And it's free. Nobody has to be rich to use it. They just have to know it exists. If you've made it this far, you already know something most people watching a video like this never bother to learn. And that's exactly why the next few levels are going to feel less like a story and more like a set of instructions. Most people watch something like this once, nod, and forget it by the time their next paycheck lands. The ones who come back to this channel level after level are the ones who stop asking why the system works this way and start asking how to stand on the other side of it. Something shifts. Not in your income, in how your income is built. You're 38. $400,000, but not from one paycheck anymore. Half of it is salary. Half of it is distributions from a business you now partly own. Your accountant, not Walt this time, someone sharper, someone who bills by the hour, tells you something that sounds almost illegal the first time you hear it. Pay yourself a reasonable salary and let the rest come out a different way. The rest gets taxed lighter. Not because you hid it, because the law was written on purpose to treat it differently. A friend from college, still fully salaried at a company doing similar work, makes almost the same gross amount you do. He pays a noticeably higher effective rate. He isn't lazy. He isn't foolish. He just never restructured how the money arrives. The wealthy are not taxed less than everyone else. They are taxed differently. And difference compounded over years becomes distance. Something shifts. Not in the amount, in what kind of asset holds it. You're 44. $1 million a year now, mostly capital gains, mostly from things you own rather than things you do. A rental property throws off a paper loss on your return, even though it made you money in real life, something called depreciation, a fiction the tax code allows on purpose, because buildings are assumed to decay even while their value climbs. You start hearing phrases you never needed before. Carried interest, qualified opportunity zones, cost segregation. None of these exist to help the waitress from level 1. All of them exist, quietly, for exactly this level. You ask your accountant if this is fair. She doesn't answer the question. She just says the code was never written in the language of fairness. It was written in the language of behavior it wants to encourage: building, investing, holding, waiting. It never once asks whether you needed the money sooner. Losses on paper, gains in the bank. That's not a loophole. That's the entire architecture, sitting in plain sight. Something shifts. Not in how much you have, in how little of it you ever sell. You're 52. $10 million in assets, and almost none of it shows up as income in the way it used to. You don't sell the stock. You borrow against it at a lower rate than the return it earns, and you live on the loan instead of the sale. No sale means no taxable event. No taxable event means no bill. When you die, under the current rules, the asset resets its cost basis for whoever inherits it, and the gain that built your entire fortune is never taxed by anyone at all. This is the version of you the billionaire from the opening scene actually represents. Not more money hidden. Not more crime committed. Just more of his net worth living in a form the code was never built to tax in the first place. Unrealized, not yet borrowed against, untouched. His effective rate can sit lower than yours did back at $20,000 a year, and every part of it is completely legal. Walt is gone now, but you still hear his voice sometimes. A refund was never a gift. A bill was never a punishment. They were both just proof that somebody else was deciding the terms. You're the one deciding the terms now. The final rule of the ladder is the simplest one, and it's the one nobody says out loud in school, at work, or at the dinner table. The tax code was never a wall built to keep you out. It was a set of doors, left slightly open the whole time, for whoever eventually learned which one to walk through. You paid more than a billionaire this year. Not anymore. Not once you understood what kind of money you were actually making, and what kind you were about to start making instead.